In this video, traders, we're going to look at 7 of the worst fat finger trades. Stay tuned. Hey traders, a very warm welcome to you. Thank you if you're a subscriber for your support. If you're not yet, you've just stumbled across this video, consider subscribing for loads of videos about trading, investing, technical analysis, psychology, all that fun stuff, and a few little more fun, humorous things like this. Well, it's not very humorous for the people who lose the money, but it's interesting for us to see exactly what's going on. So fat finger, talked about a fat finger before. Fat finger is basically when you're placing a trade that you didn't mean to. So you're buying instead of selling. That wouldn't be so bad, but some of these you'll see someone's put in massive size when they're meant to put in small size, they put in the wrong price, all this kind of stuff. A fat finger for you and I might be doing £50 a point instead of £5 a point, or £500 a point instead of £5 a point. If we're spread betting or CFD, that might be a fat finger. But now, generally speaking, there are circuits in place or there are checks in place that won't allow us to do that. With the banks, however, there aren't so many. They've got better structure now, better infrastructure now to stop these things happening. But still, they generally have an unlimited line of credit. There's generally no rules there, generally no boundaries. They've got direct access to exchanges. These things can happen. If they haven't got internal controls, whoops. All right, number 1. Mizuho Securities in Japan, they sold 600,000 shares, or a trader did, not the bank itself, a trader there at 1 yen. Whoops a daisy. So in other words, 1 yen is almost worthless, like 100 yen is a pound, give or take. So 1 yen is like a penny, a penny basically. It sold 600,000 shares, a penny, which cost them a fortune. It was trading at something like, way higher than that. Fat finger. Of course, they're not going to get filled at 1. That just means that if we don't understand how the order book works, it means it's going to be taking orders all the way down, all the way down, all the way down. Probably somebody soaked up a lot of that stock at way above a pound, way above 1 yen, and made a fortune out of it. It'd be like selling, BP shares at a penny. Putting your order in for 600,000 BP shares at a penny. You are going to get filled because someone's going to say, "I'll take those from you," and you're going to left nursing a loss. Right, number 2. This guy or girl sold 15 million shares of EMI at 280p instead of 15,000. So instead of putting 15,000 in, quite a standard amount, really nothing special, of EMI at 280p, £2.80 on the London Stock Exchange, sold 15 million instead. I don't know what happened with that, whether you got filled on that. I assume generally, unless the circuit breaker, or the London Stock Exchange has got a circuit breaker, if it moves too much in a kind of short time frame, then it will halt trading. But if someone's there to soak up that bid and someone takes it before it activates that circuit breaker, you are losing a lot of money. So that's going to move that stock significantly. All right, number 3, Glaxo, GSK. 500,000 at $13 when the price was 70p less. Not so much a fat finger, but doing the research on this, you think that's probably cost him a fair bit of cash. If he, has sold them, far less than the price he could get it, basically he's going to move that market all the way down without working the order and working the order and working the order. Unless there's a massive urgency for taking that sort of haircut, that's a bit of a fat finger and a mistake. All right, number 4. Oh, this is a bad one, this, and I've heard this before actually from someone who I know has done this himself on a retail basis, so it happens. And I think it was on Ryanair, it was on something else. Ryanair trader confused euros for pounds and sent the shares up 61%. So whatever he was doing, he was trading it, and the shares went up 61%. I think the reason they went up 61%, it was the ADR, i.e. the mirroring trades on the UK, on the London Stock Exchange against the actual underlying, sent up 61%, but that's an easy mistake to make. I've seen people do that, and it can happen. If you're trading size, it's going to hurt. All right, next one is number 5. A Eurex trader who was trading the DAX, he sold 5,180 contracts or lots instead of 1 lot at 5,180. Ouch, that is serious, because if he was trading 1 lot, he was a small trader, and whatever reason, maybe it was an adjustment or whatever, 1 lot's not a lot on the DAX. All of a sudden he sold 5,180, which is obviously the price of the DAX at the time, long time ago, and he's been absolutely hammered for that. I think that Eurex ended up unwinding some of these trades because he probably made it move an awful lot. He probably took out a lot of things, activated a circuit breaker. It's possible some of those were busted. I don't know, but That's a bit of an error. I think now you wouldn't be able to do that. If it's a training guy on the thing, you've got to blame the management for not having some internal controls in place for that. Anyway, let's move on. Number 6, UBS traders sold 610,000 shares at 6 yen instead of 16 shares at 610,000 yen. Whoops daisy. He has flipped it round. 6 yen, pretty low, and that is going to be very similar to this guy here who sold a very similar amount at 1 yen. And this guy unfortunately was supposed to do just 16 shares at 610,000 yen. That is going to cost you an awful lot of money. All right, last one, guys. Lehman, a dealer, leant on his keyboard with his elbow. He placed 600 trades in a company called Premier Oil, and it cost Lehman 1.8 million. Not a massive, huge amount of money for these guys. Well, obviously for Lehman it was, but 1.8 million, not huge. But it's a big mistake to make, a costly mistake to make, leaning your elbow on a keyboard, obviously sending buy orders through, buy, costing you 1.8 million. Now, whether that was the total cost of it or whether that was the loss they took, I don't know. But either way, pretty bad. Don't lean on a keyboard, guys. All right, thumbs up if you like this kind of stuff. See you next one. Take care. Bye-bye.